Hello and welcome to the Islamic Finance Weekly, where we bring you key developments in the non-interest finance market. Sharia-compliant funds are witnessing significant growth and activities in the global market. In frontier markets like Nigeria, several Sharia-compliant funds have evolved, providing investment options for ethically minded investors in the country. On today's program, we will discuss Halal Fund, opportunities for investors and key issues around regulation. Speaking to us this afternoon on this relevant topic is the CEO of HalalVest Limited, Mr. Oguntoyinbo AbdulAzeez. Mr. Oguntoyinbo joins us virtually from Lagos. Good afternoon and thank you for coming on the program.
Thank you very much. It's a pleasure to join you.
Welcome. Part of the reason one should choose to invest is to have financial security. Consider the fact that it is important to achieve long-term goals. Let's start the conversation with understanding what the Halal Fund is all about and how it operates.
Okay, thank you very much. I think it's pertinent to, discuss what halal itself means. Halal is an Arabic word that relates to something that, being lawful or permitted. It's a common word among Muslims to define approved practices. And when you're talking about, mutual fund, you're talking about funding people who have access to, come together, set up an investment vehicle made up of a pool of funds collected from many investors, with similar investment goals for investing in different instruments and assets. Profits made from these investments are distributed to the investors according to their contribution to the pool. And when you're now trying to marry the two together, what is now Halal Fund? So Halal Fund are funds that are managed in a Sharia-compliant way throughout the entire life cycle, from product development to terms, to collection, to investment, and to how you also get your returns. Anyone can invest in an Halal Fund, whether you are a Muslim or you are a non-Muslim. But, the management must be done by Islamic finance professionals and also Sharia, scholars. Islamic funds, Halal funds have strict rules and regulations that are binding them. You cannot mix Halal fund and non-Halal, funds together. They should be managed separately. Due diligence and transparency must be done. You can't gamble with Halal fund or carry out highly speculative investments. And the requirement is to hire a team of Islamic finance professionals to work with on setting up these funds. Okay. And you also have, Shariah Advisory Scholars.
Okay, thank you very much, Mr. Oguntoyinbo, for your perspective. With the definition you've given on Halal Fund, it is very clear to understand that Halal Fund are investments that are Sharia compliant and socially responsible in investing. Can you expatiate more on the major types of Halal investments and who are the people that can invest in Halal Fund?
Yeah, so as I said earlier on, that Halal Fund or Halal investments, present an inclusive option for anyone to invest, especially Muslims who consider certain social welfare and moral standards when investing. Interestingly, this form of investment has existed since the 7th century, but only started to experience formalization in the 1960s. Another interesting part is that the entire Halal Islamic finance industry, hovers around a $2 trillion valuation.
That's that was as at 2019.
Yeah. So as of today, it keeps increasing day in, day out. So the major types of Halal fund or investment are, we have the Sukuk bonds. Okay. And if you look at the opportunity around this, looking at the federal government Sukuk, in less than a month, it was oversubscribed by over 150%. This is just to let us know the opportunity in the Halal investment ecosystem. You also have the Ijara, you have the Murabaha, you have the Halal equity funds. These are several types of funds that are, available in the Islamic, finance industry, and there are a lot of potential. You have a lot of them, clustered around different different sectors, and there are a lot of opportunities there. So you have varieties. So these are just examples of the kind of halal forms of funds and investments.
From your point of view, you highlighted the 4 major types of halal funds we have, which are sukuk bonds, ijara, morova, and the halal equity investment. So can you expatiate more on how they work?
So basically, how they work is, you need to have, we have different stakeholders involved. You have the fund manager, like I mentioned earlier on. We have several fund managers today that are running Halal Fund. There are many of them. We have Lotus Capital, we have Marble Capital, we have Cord Capital. There are many of them.
Yeah,
some of them are standalone, while some of them are independent. They have subsidiaries. But for you to be able to register, in line with the regulatory requirements, you need to have your documentation as an investor, right? So you need to have your documentation, the normal KYC, to subscribe to their fund.
Are you talking about the requirement for setting up a halal fund, particularly in a market like Nigeria?
Yes. Okay. So, like I said, we have different stakeholders. The requirement for you to set up the halal fund, okay, as for instance, like a fund manager. Now, we have different perspectives to read, and I believe, different people can decide on how they want to go about it. If you want to go in line with the regulatory requirement by SEC, Securities and Exchange Commission, you are expected to have, a minimum requirement, capital requirement, paid up capital of 100 million. And this is in line with the draft that was released April 2020, last year, to regulate the crowdfunding and fund management industry, particularly in the crowdfunding space, using with the likes of these fintech startups and fintech companies. And for an halal fund, you need to also set up what we call the Advisory Council of Experts. Those are the Islamic Finance Scholars and Sharia Scholars that are also certified, that have that experience to also be in that advisory board. So this is one of the requirements by the regulators, particularly SEC, if you want to run an ethical halal fund.
Okay.
And another requirement is the process and procedures must actually be clear, in line with the ethical financial principles. With an halal fund, you are not supposed to actually invest in high risk securities, and it also requires you to comply with the Islamic principles. There need to be ownership of assets. In terms of the risk sharing, it needs to be very, very clear. We have exposure to enterprise risk. So these are some of the features that you have in ethical fund if you want to set it up. And it's very, very important that you align. Particularly, we have several people that are even non-Muslim that subscribe to this fund, because everybody are thinking around having to invest ethically. While you just find some people also looking at how they want to multiply their investment, but they don't want to care about what kind of risk is involved, what do they invest in, what kind of returns are they going to get. But I think one of the requirements is to set up the as a regulated entity.
Yes.
With SEC, that is if you are going by SEC. And you also have, the Advisory Council of Experts. In terms of the product development, the core criteria it must meet, compliance with Islamic principles, ownership of asset, risk sharing, and several other, best practices to ensure that this fund is ethically managed and invested.
Thank you very much, Mr. Oguntoyinbo. for those insights. You see, Halal investment guidelines requires decisions to be made in accordance with Islamic principles and must be regulated. Thank you very much for those insights. Following the recent developments between the SEC and HalalVest on operating Halal Fund, what is the clear difference between operating collective investment scheme under a cooperative law and operating it under the regulation of the Securities and Exchange Commission?
Yeah, it's very, very important. And this is why I said, if you want to go in line with the SEC, fine. The regulators are doing great to also try and sanitize the industry, because we have a lot of companies. They call themselves fund managers, and some of them appear to be promoting Ponzi schemes. You are unable to trace them. You can't actually they don't have the predefined investment guidelines, and it's really, really painful that several people has lost millions of money due to these Ponzi schemes. And that's why it's very important that regulators also look at how they can also sanitize the industry. And if you look at the SEC, with the draft they released last year, April 20, 2020, it actually shows that this is the direction the industry is going in terms of trying to flush out entities that are not registered. And it's actually in line with the public interest, general public benefits, because you find a lot of people today, they want to get twice what they have without considering whether this is risk-free or not, whether this is ethically compliant or not. So that's why you have the SEC. And if you want to actually go by the SEC requirements, I think it's clear that you actually need to align, in terms of the regulatory requirements. So number one is that they require a 100 million paid up capital for you to actually be registered as a crowdfunding subsidiary, intermediary. Wow. Yes, crowdfunding intermediary, for you to be able to list fund, to be to actually request crowdfunding from pool of people in the general public. And this is very, very important. And there are categories of the fund in terms of limitation to the fund you can actually mobilize. For medium businesses, you're able to mobilize to up to 100 million. For small businesses, you're able to mobilize up to 70 million. For micro businesses, you're able to mobilize up to 50 million. But there are exceptions to commodity investment portals that are actually related to agricultural products. But I believe these are ways that SEC has been able to put in a guideline to actually regulate and protect the public, so that people don't actually just go and start aggregating people to come and invest in a crowdfunding portal that is not actually registered, that does not have any kind of basis. You get? So this is very, very important. And if you are also looking at the other angle, which is the cooperative law, yes, you are able to also set up a cooperative society, particularly a multi-purpose cooperative society, where you have to register your members, to actually save, invest, or have access to loans, have access to secure assets on a loan-to-own scheme. So yes, this is actually covered with the laws of the cooperative society according to different states. For instance, we are also registered as a cooperative society in Lagos State, and you have the bylaws that also governs how you actually operate the fund, how you manage your members' savings, the entire end-to-end process, and this is very, very clear. But there are limitations to how you are able to operate, because the cooperative, Lagos State cooperative law, can only govern you within the tentacles of Lagos State. But if you are covered by, SEC, I think you have the capacity to operate beyond a particular state. And that's another, benefit. But I believe it depends on the kind of area you actually want to play in. But the both are actually legal, but it depends on the scope of how you operate with it. And it's very clear that even if there are a lot of companies today that are leveraging technology to advance their operations, we all know that innovation is always far ahead of regulation. For someone that has even the likes of the microfinance industry, you have a bank that has a unit license, but actually employs technology to operate. And you can have even customers outside the country because it's technology driven. So I think the regulators are also considering this, and they are also watching what is happening. But the most important thing is the safety of the fund, which I believe the SEC and the cooperative society regulators are also concerned about. So I think both are legit, but it depends on the scope. But most importantly, the regulators are also concerned about the safety of the funds.
All right, thank you, Mr. Oguntoyinbo. Now, when we look at the activities of the SEC in Nigeria, so how will you describe the regulatory environment for Halal Fund market in the country?
Yeah, I think it's fine. Considering some of the players that are already working in the industry, I think because where we work at HalalVest, we also partner with ethical financial institutions such as Lotus Capital, Marco Capital, which are also regulated by SEC. So I believe it's really that it's an industry that is really emerging. There's still a lot of opportunities that are yet to be tapped. The industry, the environment is still friendly, but I believe as an ethical financial sector, it's very important to note that there are risks. We are very, 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 very conscious of the risk involved. And, it's really, really key based on the principles of the Sharia. And this is very, very important. Some people will say, the rigidity of the principles, in terms of the risk, exposure, how to manage the funds. Yes, because funds are very, 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 can be very liquid, and you don't know what can happen. And that's why you look at the margins. Some people want to earn 10%, they want to earn 20%, they want to even earn 120% of their funds in short time. They don't want to care about what are the risks involved, and this is a very huge concern. So if the regulators are now still coming with, several rules and regulations to also, bind that ethically inclined, fund management, I think it's really, really key. So it's not about maybe the industry is very rigid or the way SEC have been, regulating what is happening. I think it's also about the mindset. This is an ethically, inclined, fund. So it needs proper monitoring and management, and with very strict rules.
Well,
so once you are ready, we know.
Well explained, Mr. Oguntoyinbo. Before I wrap up this conversation, explain in a short context the benefits of Halal Fund to investors. Yeah,
so I think it's very, very important to look at the potential benefits one can derive from Halal Fund. And this is very, very key. One of the benefits it has is that it's actually stabilized the economy. So because you have lots and lots of potential of the fund in terms of how it's being managed, in terms of the risk. So there's a very high level of stability in the economy in general. And it has lots and lots of potential to even increase the GDP of the country. And it's also positioned, it can actually reduce any kind of economic shock or disaster. you look at, some of the problems from different countries, the global meltdown that has happened in the past, countries that are actually, leveraging Islamic finance strategies, they are actually stable. So one of the benefits to the, to the entire populace is that it actually increases and stabilizes the economy. So the second advantage, the benefit, is that you have lots and lots of potential in terms of how people, both, generally, whether as a Muslim or non-Muslim, are able to actually invest in an ethically inclined, fund. And this goes a long way, because, you look at, everybody wants to actually align with, say, in an ethical way, right? So, and you try to see, okay, what are kind of, opportunities around there, and how can people actually, promote, their investments in terms of being risk-free. So another benefit you have, is that it actually seeks to, eliminate, bonds and other interest-based investments. If you look at the sukuk, look at how the government is able to raise this fund from the general public. Look at the potential it has, in terms of the infrastructural development to the entire, country. So there are lots and lots of potential. And look at the short time it was actually, launched. It was oversubscribed beyond before the this is very, very, very interesting, and it has lots of potential. So enhancing economic growth and development, infrastructural development, and economic stability, and it also boosts investor confidence.
Investor confidence. Thank you very much, Mr. Oguntoyinbo, for this robust conversation. We appreciate your intervention.
Thank you very much for having me around.
You're welcome. I take away from this conversation is that investing involves risk, including possible loss of principal, but when an individual, companies, industries, or sectors invest in ethical, responsible products that are Sharia compliant and regulated, they yield a long-term achievement. And that will be all for this edition of the Islamic Finance Weekly. Log on to www.proshareng.com for more information on Islamic finance. Follow us on our social media platform displaying on the screen. Kindly comment below and let's hear your thoughts, and also for your inquiries. Many thanks for watching, and join us next week for another exclusive interview.